We'll start our next session. My name is Ashish Chugh. I am head of global emerging market equities at Loomis Sales. Loomis is a large investment management firm based in Boston. The firm manages about 320 billion. And we invest a lot in India. I head our India investments. So this is really a treat to hear from so many investors based in India as well as entrepreneurs. And today I have the great honor of speaking with Sarvesh Kanodia. Sarvesh is Director of Investments at the Pierre Omidyar Network. So the Pierre Omidyar Network was started by its namesake, Pierre Omidyar, who was the founder of eBay. And unlike many other venture firms, this firm has not only a financial mission, of course, to have a financial impact on its investors, but also, equally importantly, to have a social impact. And we'll learn more about that from Sarvesh. So Sarvesh is Director of Investments at Pierre, and prior to that, he had spent his time in the finance industry at another private equity firm, and before that in investment banking. So Sarvesh, welcome. It's very nice to have you here. Thank you for joining us. I know it's late in India. Sarvesh, you're on mute.
Hey, hi. Hi, Ashish. Glad to be here.
Yeah, thank you.
And thank you for having me.
Yes, we can hear you. Thank you for joining us. So maybe we can start with, if you can just give a little bit more background on the Pierre Omidyar Network and your role at the firm, please.
Sure. So about me, I'm part of the investments team here at Omidyar Network India. And I've been with the firm for over 8 years now, more than a decade now, in the investing space. Was more on the growth stage side earlier, and then with Omidyar Network India, I've been on the early stage side and looked at investments across a range of sectors. At Omidyar Network India, we are an early stage, impact-focused investment fund, which was founded by Pierre Omidyar, who's the founder of eBay, like you mentioned. And the idea really behind forming Omidyar Network India, was to create large-scale social impact using what we call as a dual checkbook model, where we make both equity investments in startups as well as non-equity investments. And the idea really is that how can we use the financial capital that is available for us, to create impact. And the two sort of, ways of investments are to serve that purpose. Where on the equity side, we look at, investing in startups where we come in at the early stages. Typically seed series A is the sweet spot for us. Entry check size is anywhere between 500,000 to 5-6 million. And the idea then is to double down and invest in subsequent rounds, over the growth journey of the firms that we are investing in. And on the non-equity side, there we look at grants, research, and other areas, which are primarily impact driven and not sort of investment return driven. When it comes to the equity investment side, we have an interesting philosophy where we focus both on impact and as well as, financial returns, where the rigor on financial returns is similar to how other, market-based financial investors would look at. But there is an equally high bar on impact. And for each investment that we do, we have to meet the bar on, both of those.
Got it. Great. So it's a very interesting model to be able to do well and do good, to financially give returns to investors as well as have a social impact. It's sort of the holy grail. I'm sure everyone would love to do that. But isn't it hard to do that, to basically have both a social impact as well as a financial impact?
Yeah, I would say no. And I'll tell you the reason why I say that. I think one, when you look at the ecosystem today, and it is, I'll talk about some of the data from our own portfolio as well. But there is a large and growing number of entrepreneurs who are actually wanting to both create impact and as well as believe that there is a large financial opportunity doing that. And so in that sense, when I look at all the body of work that we've done, when I look at our pipeline and all the areas that we are investing in, I would say there is a lot of room, and I would say there is a lot more capital, in fact, that can come in from that perspective, because there's enough from a market perspective that is out there to build for. And at the same time, there are a lot of entrepreneurs who are also, sort of playing in the space. So if anything, I would say is probably the constraint is, I would say, more capital in the ecosystem, as opposed to dearth of ideas or sort of market being there, right? And then I'll talk about, some of the data points, right? Both from a macro perspective as well as from what we've seen in our portfolio. When you look at it from a, where India today is, we are actually at a very unique inflection point where 60% of the population is actually living on less than 20,000 rupees per month income, right? However, what is also happening is at the same time, because of technology, increasingly the segment is coming online. They're looking at access to products and services. And as a result, if you have to build a large company, which is focused on India, you have to look at that segment. What we at Omidyar Network India call it as the next half billion, which is really the 500 million Indians who've come online over the last, 5 odd years, and are from that low and middle income population. When you look at it from a, tailwinds perspective, there are several initiatives that the government has taken over the last few years, be it in terms of providing the basic digital infrastructure or even the financial inclusion infrastructure, right? Which has led to, I would say, having an infrastructure that is helpful for startups who are building across sectors, and again, not just who are focused on financial services, right? So there is both, I would say, macro that is supporting the kind of work that we're doing, and in some sense that is evident from the data that we are seeing in our portfolio as well. So to give you a stat, we've been investing in India for almost last 13 years now. We've deployed roughly 450 odd million dollars between both equity and non-equity. We've actually already returned $250 million to our LP. And this has been through exits, in our portfolio companies over the last few years, where we've seen exits across multiple sectors, be it financial inclusion, be it education, and others as well. And the reason is because one of the things we are seeing in our companies is that the companies that are creating the most amount of impact are actually creating financial returns as well. So in some sense, there's a very strong correlation that we're seeing, and as such, and which is why the short answer to your question was no, and then the long answer to back it up, with all the data that we're seeing.
Yeah, sure. That's very helpful. So you mentioned financial inclusion, you mentioned education. So what are the different areas of social impact that the firm is involved in? What are the main areas that are in need of investment for social impact in India, especially a growing developing country like India?
Yeah, so we are sector agnostic, and the underlying, I would say, framework that we use for any work that we want to do is how it impacts the next half billion population that I spoke about. So any investment that we do, no matter which sector, that is, I would say, the underlying philosophy that we look at, right? Now, in terms of the sectors, I would say there's a broad range of sectors, and the way we've classified it as, when you look at this target population, what is it that they need the most? And what we believe will help create a meaningful life for them, right? And so there are some sectors where I would say there's a lot of focus right now for the fund. And so if I were to name them, one, for example, skilling and livelihood. When you look at it, we have the youngest or the second youngest population right now in the world, soon to be the youngest population. And one of the things which is most important is how do you increase the productivity of the workforce, or the workforce that, or the youth that will enter the workforce. And in order to do that, you have to skill them. And once you skill them, there is a need to also generate livelihoods and income generating opportunities for them. So that is a big area of focus where, we recently published a research report as well. We've, funded many companies in this space as well. So that's one. Secondly, healthcare. When you look at it, access to basic healthcare, I would say still a lot of improvement, especially when it comes to the next half billion. That is a big area of focus for us at, Omidyar Network India. Financial services is a space where we've done a lot of work, but again, there's a lot of room still to grow. And that's a key area of focus. Mobility, when you look at it, both in terms of personal mobility, commercial mobility, etc., big area of focus again. Agriculture, sizable population today, dependent on agriculture in terms of their, means of livelihood. Again, a big area of focus for us. And when you look at all these five areas, I would say the underlying trend that is also shaping some of these industries, I would say, are two. One is obviously AI, and the other is climate. And while these could be both sort of looked at independent verticals, but this I would also consider them as a horizontal, across each of the five areas that I mentioned.
Great. Yeah, that's quite a breadth of areas. So maybe this sounds great. Maybe you can sort of bring it to life a little bit more through examples. So you're certainly on the boards of many of the portfolio companies that you have invested in. So maybe if you can talk about a few of the investments that you have made and the not just the financial, but obviously the social impact that these companies are having on India, that would be great.
Yeah, let me give you two examples of companies that we've exited. And the reason I mention is to again to prove the model for how companies which are creating returns are also ones that are creating massive impact. And so one of them is Vistar Finance, which was a multi-bagger for us. The company is basically lending to small and medium, size businesses who otherwise would not get access to formal credit, because they lack credit history. And they've sort of over the period. So we were early investors in the company, and they've over that period lent to hundreds of thousands of SMEs over the last few years, and making a significant difference in their business growth because before Vistar would come in, they would actually rely on informal sources, which one would be unreliable, secondly would be much higher cost. Whereas when you come, when you become part of the formal financial, sort of services ecosystem, then you transact with Vistar and other such intermediaries, but it also opens up many other opportunities which was earlier not available to you. And to give you a sense of the business, just when we exited, they were roughly 350 million in loan book. And I would say the active customer base would be roughly 30 to 40,000 such enterprises which were active at that point in time. So massive impact when you look at it from a SME small business owner ecosystem point of view, right? And seeing the success, I think one of the things we also look at is one is the direct impact, the other is also the indirect impact, which is how are you changing the sector. One of the things we've realized is for some of these sort of companies which are nascent in the areas where they come in, when they see success, the others also then are seeing that success and how those companies are doing, and they are then taking those playbooks, learning from them, and also building more in those sectors. So it's not just them that are having the impact, but just looking at their work, there are other who are getting inspired and building companies in that sector. So there's a massive indirect impact, I would say, that also happens with some of these success stories. I'll give you one more example again of a company that we've exited, which I was on the board of, is a company called Aspiring Minds. Again, a multi-bagger for us. We came in early. The whole, sort of thesis when we invested was how do we move hiring, which traditionally has been a very resume-based method. So it was almost okay, which college school you're coming from, as opposed to what skills do you actually have. So how do you move the hiring system from a resume-based method, to a skills-based method? And they developed an assessment product that could test individuals who are applying for jobs, basis their skills as opposed to what educational qualifications they have. And the idea was that this would enable students who come from tier 2, 3 colleges, who might be skilled enough for the job that they are vying for, just that they might not be from the best colleges, but can they get access to those quality jobs? So when we invested in the company, they were fairly early, and by the time we exited, they were actually the largest assessments player in the country. And moreover, one of the I think things they did well was to also expand internationally. So when we exited, they were also working with Amazon in the US, which was hiring actually, I think almost all their software developers who were hired would go through their assessment platform. And there were other countries also that they had expanded in. So I've given you two examples, different sectors, but again, both great success stories when it comes to financial returns, but more importantly, equally high social impact, in terms of what they've managed to achieve.
Yeah, that's great. Those are great examples, and I'm sure your portfolio has a lot more of those. So you mentioned earlier about financial inclusion that the Indian government is doing. You mentioned earlier about UPI, the Unified Payments Interface. So is there anything specific about India, unique about India, where this model works well? Is there anything that the government is doing to enable this model of financial impact plus social impact in the country?
I think there are multiple steps that I would say are being taken care, by the government. There is one I would say at a very industry level. When you look at it in terms of the biggest issue, you would call as lack of access to capital. And there I would say both capital which are available to tech startup entrepreneurs, which a lot of people in the room might want to start up. But again, even a lot of small entrepreneurs, who are at the grassroots and wanting to build, let's say, a small micro enterprise. And I would say there's been an effort supporting both kinds of entrepreneurs. To give you a sense of the tech startup ecosystem and how they're solving for sort of startup funding, they've actually put in a lot of capital, which has gone as LP money in a lot of the funds that domestic funds have raised. And this is like significant capital that's going into the ecosystem coming from government enterprises like SIDBI and the others. So I think one that is playing a key role. Secondly, and I cover agriculture quite extensively. Again, there's and I see that in agriculture, and so it's true in other sort of sectors as well, where there are a lot of accelerator programs, sort of government universities and different kinds of initiatives that government is taking at each industry level to figure out what they could be doing. So I would say that is second. Thirdly, I think just the digital public infrastructure. So while it started with financial inclusion, with whole UPI and Aadhaar stack, it's now happening in the other sectors as well. So be it education, healthcare, agri, again, across all sectors, there's a lot of digital public infrastructure being built, by the government, which will help startups across various ways. So one of the key areas, for example, becomes access to, for example, customers, right? And so ONDC, for example, right, where you're bringing a lot of the buyers and sellers on the ecosystem, again reduces your cost of acquisition. Similarly, one of the things that they're trying to do in agri stack as well, right? How do you reduce that cost of distribution? So there are other benefits as well, but that, for example, becomes a key one because that's one of the biggest issues for any early stage startup. So I would say there are multiple such initiatives that the government is taking, I think, which is helping fuel the overall startup ecosystem in India. Apart from obviously all the spending that's happening on infrastructure and all the other things, which is helping grow the economy, improve purchasing power, etc. Which are all the, I would say, the other macro impacts of everything that's happening in the ecosystem as well.
That's great. So it seems like the government is enabling the ecosystem for entrepreneurship, for capital to come in. So where are you seeing the entrepreneurs going? Where are you seeing the opportunities in entrepreneurship in India? And then also, where are you seeing capital going? Where are the investment opportunities that you find interesting?
Yeah, I think across all the areas, like I mentioned, Ashish, like fintech, agri, healthcare, education, I would say a couple of areas where perhaps we do lesser work, just given the impact thesis might not there be as strong. Like SaaS, for example, a lot of companies are, building in India, but, focusing on the global, sort of, environment, global businesses, right? And so that is something that we are seeing, happen quite a lot. There are some that are in our portfolio as well, which are building both for India as well as for the world. I think there's a lot of capital, that's flowing there. Consumer brands, again, as a space has picked up quite a bit. Both these spaces we play sort of, I would say, more opportunistically, just given our impact thesis. But again, there's a lot of capital apart from all the other sectors that I mentioned, where there is interest from both entrepreneurs as well as investors. And like I mentioned, AI, climate, again, are those horizontal themes that we are looking at across, be it fintech, edtech, etc. Where again there is both increasing amount of ideas that are coming up, from the sort of the entrepreneurial ecosystem, as well as there's a lot of interest from the investors, to find companies in these sectors.
Got it. That sounds great. So it's very easy to measure the impact as a financial investor. You just look at your, like you mentioned, multi-bagger. It's easy to say that you had a financial impact. These investments were multi-baggers. But what about measuring impact socially? Do you look at that? How do you measure it? And how do you know you're being successful as a social investor?
Yeah, so we actually have a very, I would say, somewhat rigorous way of measuring impact. And we do it both at a particular company level, and we also then try to pull it all together and see that how we are doing, from a Omidyar Network India perspective, right, on an overall portfolio level. And there are different initiatives that we take, which I'll also get to. But just in terms of how we measure, I would say at the very high level, there are two: direct impact, and then there is indirect impact. Direct impact, I would actually break it down into three. One, what I would call as the scale of impact, which is how many customers the company is reaching out to. Secondly, what we call as the depth of impact, which is basically as a result of what the company is doing, what is the improvement in the quality of the life of the customer that they are serving, and it's measured by their feedback, NPS, etc. That we use to measure that. Thirdly, what is very important for us is also inclusion, which is how many of the customers that the company is reaching out to are actually from the next half billion segment. So we look at all these three, and then there's a sort of a complex scoring methodology that we have across each of them that we use to classify as direct impact. Then what we call as indirect impact, which is the sector impact that I was telling you about, which is as a result of all the work that that particular organization might be doing, what is the change that has happened in the overall sector? And that is, again, there are different ways that we measure that. Then we look at, okay, how is the company doing on direct impact? How are they doing on indirect impact? There's a low, medium, high methodology. And again, a combination of that leading to how the company is doing on an overall impact basis. And then there is a sort of a scoring from that perspective, right? Then what we do is for us to evaluate, one is at a company level, but the other is at an entity level. How do we, measure, how do we sort of, are we doing well or not? We try and aggregate again all of this and look at all these metrics that I spoke about. So how many, if I look at a portfolio level, what is the percentage of users who will actually be from the next half billion? What would be the scale of impact across all the portfolio companies put together, right? What sector change, which sectors would have our company sort of actually, meaningfully made progress in, right? In terms of, the kind of shift that would have happened as a result of what they're doing. So all those things, then we try to aggregate at a organization level, and then we evaluate ourselves, and it's something that we publish to our board as well, and we get evaluated frankly on that basis. So our evaluation as a we are a single LP fund, and the evaluation for us is not just on the basis of returns, but it's also on the basis of the impact that we are able to generate through our portfolio companies.
That's great. The measurement that you're actually measuring your impact and showing to the world that this model can work is really remarkable. So you've certainly met a lot of entrepreneurs. You've certainly invested in a lot of companies, been very successful at it. So what advice do you have? We have a lot of students here. What advice do you have for the students about becoming an entrepreneur, especially in India? I'm sure they'd love to hear your words of wisdom.
Yeah, I would say I would really highly recommend, and I'll tell you why I'm saying that. I think it's the best. I think one is the India story, and I think just in terms of where I would say the students are in their life cycle, and I would say the earlier you start, the better it is. And the reason I say is, you have a higher appetite for risk, and you have a relatively lower opportunity cost than you would have later in life. So I would say, right out of college is perhaps the best time to start. In some sense, you're also uninhibited, and it helps you, be foolish, which I think you do need to be if you are starting up, because it's such high risk. That unless you are ready to be a little foolish, I think it becomes difficult to start up. So my recommendation will be to, if you're keen on doing it, just start up right after college if you can. Of course, I understand there are always financial constraints and things like that, which at times, are barriers that come, in the way. But if you can solve for that, I think it's the best time. I did speak about the macro environment as well. So just the enabling environment that's there. And there's a lot of, I would say, activity even in the student entrepreneurial ecosystem in India. In fact, we ourselves have invested in this fund called Campus Fund, where the idea is they actually fund student entrepreneurs and then provide them with both capital and guidance like any VC fund would do. But the criteria for them is it has to be a student who's either in college or would have just passed out. And there are similar startups globally as well, right? And there are other startups, other funds in India, which are similar to Campus Fund, and building that ecosystem for student entrepreneurs. So I would say it's there's a enabling environment that's there today, which I don't think probably existed a few years back. So from that perspective, I think it's a great time to start.
Great. So I'm sure they'll want to meet with you or talk to you when they visit India. So I'll open it up for questions now. I certainly have a lot more questions I can ask you, but wanted to open up. Please go ahead.
Hey, my name is Parvar. Thanks for the great talk. I learned a lot from it. I just had a question that you mentioned the social impact a lot. And the question I had is, do founders stray away from the social impact they wanted to make when they start the firm? And how does that impact the financial impact, like the financials of the company, if they are going away from that social impact they wanted to make? Like, is it positive or negative, or how does it?
Yeah, it's a great question. And to be honest, this is something we discuss even today after 13 years of being here, right? There are situations where you will come across where, you might have invested thinking that, this company is focused on this particular segment where there is going to be high impact. But after a certain time, you figure out that probably that business, there wasn't a viable business then, and they end up pivoting to something that is probably not as impact oriented. But I would say that is perhaps not as frequent, to be bothered about. I think what we do well and the way we solve for it is that our and which is why, when I spoke about how we evaluate, we look at both whether there is a financial return and impact in terms of the business model that they are trying to build, right? Because if you don't feel that, if you don't think after your evaluation that serving that target segment there is a financial return to be made, sooner or later the entrepreneur will also realize that. So you might put in the money thinking that, okay, perhaps they will stick around, but if there is no financial return, they might not stick around, and for the right reasons, right? Because they have an opportunity cost, they also want to, take care of themselves and so on and so forth, and they have their own reasons for doing it. So I think the important thing is to make sure that when you are selecting ideas where you believe will, both will happen, where you will create impact and financial returns. And I think when we see in most cases, like I mentioned, where you are creating impact, you are creating financial return as well. The only place where I would say there is a deviance from that is, let's say if things are not going well and you realize that there is not a, good enough business to be built in that particular target segment with that particular solution, in which case there are some companies that might, end up doing something else than they originally sort of thought of. But I would say that doesn't happen as frequently. But I wouldn't say that it never happens, but it's not something that, we would lose sleep about.
Next question.
Hi, I'm a MBA student here at Northeastern. Thank you so much for this talk. Regarding financial inclusion, I was wondering what efforts have you seen prove most effective in tackling the gap of financial literacy, especially when we talk about access and being able to leverage those capital investments that people might receive? And relatedly, what are the challenges that are currently the most difficult barriers to overcome that should be prioritized in tackling and investing in?
Could you talk more about the second question? I'm not sure I completely understood that.
So when it comes to the idea of, there's so many different ways to tackle the issue of financial literacy. So specifically, we see it in America, we're seeing it in different countries, but specifically if we're looking at the startup culture and India itself, what are the unique barriers that those of us who want to contribute and want to be partners in this, what are the efforts that are prioritized for the nation of India and specifically for the challenges that you are seeing on the ground?
Yeah, thank you. It's a great question again. I think there are both, when you look at it in terms of initiatives that industry bodies have taken, and I think in initiatives that each company needs to do in terms of tackling the problem of financial literacy, right? When you look at it, there are campaigns both by the government, again, both in favor of certain things that you need to do. So, for example, mutual funds as a space has really picked up in India over the last few years, right? And one of the reasons is there has been a growing awareness in terms of campaigns, etc., which are run by industry bodies, recommending people to invest in mutual funds, right? And that has created a lot of awareness, about mutual funds, in the general public, and that has again really helped, right? Now, when you look at it again, phishing, for example, is one of the, I would say, the negative connotations of everything that has happened in the, in the financial ecosystem, right? And again, there is a lot of, I would say, awareness that is being driven by, different government agencies, in terms of bringing awareness for how you can prevent, from, being attacked, right, by different, such elements. So I think from that perspective, there is both, there's a positive impact when you see what mutual fund industry has done, and then to safeguard against some of the risks like phishing, etc. There are campaigns that have been done by the government. From a startup, perspective, I think the few things that we've done, what we've seen is, one is vernacular. And there, we've had, both, in our portfolio companies and, outside as well, because the larger target segment that you're reaching out to is not necessarily an English speaking audience. You have to keep vernacular in mind when you're designing the product, and how the product, usage would look like. So I would say one is that. The other is understanding how that person would react or use the app. So your behavior in using the app, my behavior and their behavior could be very different. So I think when you're building for that target audience, so audio, for example, is something, audio nudges, right, is one of those tools which we've seen some entrepreneurs sort of experiment with, because when you're, using a new app, you're at times unsure of how to use it, right? So there is one, element of how do you bring some of these vernacular audio, etc., into the product, experience as well. So I would say that's second. Thirdly, I would say what you are seeing, be it on social media, otherwise, there is a lot of content that is being generated, around financial literacy, and there are companies which are operating in the space which are also promoting, this content so that more and more people are aware. Now, I would say there are very different elements of financial literacy, right? There is an investing element of financial literacy. There is safeguarding your existing money, element that's there. There are different target segments. So student today also needs to be aware about financial literacy, whereas a housewife also needs to be aware about financial literacy, right? And so in that sense, it's the whole ecosystem who has to work on that. And so content creation is perhaps one way that, that a lot of people are sort of working on that. Again, there are a lot of organizations which are working on the ground, not-for-profit organizations which are working on financial literacy. So I would say this is a complex problem that is being handled by multiple stakeholders, through different ways, in solving for that.
Great. Unfortunately, we're out of time. This was really a treat. It's excellent talk, and you've really demonstrated that it's possible to do well and to do good as an investor. And so all the best of luck to you and the Omidyar Network in continuing on your mission. Thank you so much. I know it's very late over there, so thank you so much for making the time to speak to us.
Thank you, Ashish, and everyone, for having been a pleasure.